Well, the year 2012 provided investors with an exciting ride and provided yet another reason why making predictions is really a pointless exercise. Despite all the doom and gloom expected at the beginning of the year, investors on the JSE walked away with a return of 27%, some say 22% for the year. Well, it was 22% on the JSE All Share. Here to describe how the world might come to grips with the current set of challenges is Chris Hart from Investment Solutions. Well, I've been quoting those numbers today. So is it 22% on the JSE All Share, 27% on the overall market?
It depends on whether it's total return or whatever. But
well, 27 sounds so good. Let's go with that.
I think it's about right, as well. Funny enough, I think we can get the same. We've got certainly a liquidity-driven momentum kind of market, and I think we can get the same, 50,000 by the end of the year. But of course, with lots of bumps in between. It really, and we had that last year as well. It was the internal, external ping pong. Was it, local politics and conferences, etc., or was it fiscal cliffs and Draghi's doing?
Well, who really thought we weren't going to survive the fiscal cliff? I mean, what was going to happen? They're going to declare bankruptcy in the US. Of course, we were going to survive the fiscal cliff, and stocks were going to go up as a result.
No, exactly. But that's the internal, external debate. I think this next year will be quite key. Do we stabilize our credit rating, or do those negative outlooks sort of materialize and further downgrades come? That would be very disappointing. Obviously, the budget is quite key. Do they actually get the real point, or is it going to be to try and just escalate taxes to cover the expenses, or are we going to continue on an unsustainable trajectory? That's what needs to be fixed. If that can be fixed, and I think the post, Mangung ended up to be quite positive, I think it can be fixed, and I think hopefully we'll get through. But we had the president sort of at the ANC conference, and you got the mixed messages again. Message to the constituency, the throngs, the crowds, which is very different to the message you give investors. And you can see that split personality, as it were.
Chris, just to get into that before we ask you about some more financial market-related stuff, Cyril Ramaphosa is now the Deputy President.
Yes.
What do you think his effect's going to be on the government finances and especially also government programs, like the infrastructure programs and the SIPs that they've identified?
Well, he's what of course a businessman who actually runs businesses that are embedded in the economy, that don't depend on tenders to exist and that type of thing. In other words, he knows how to run a business. He also knows how to run a union, and that's that's what I think he brings to the table. I suspect, for the first time in more than 10 years, if you like, that we're going to see a line of communication open to business. And that's important, and that will help to actually stabilize investor confidence. Because when you ran, post-Marikana, I think, business was quite isolated and felt, under siege. But we've got to get to the point where the various stakeholders actually working with each other.
It is good news, and certainly business has welcomed Cyril's position.
I agree with that. I certainly
Just
agree with that.
taking a step back, is the market, let's look at that performance and dissect that 27% performance over 2012.
Yes.
Is it broken up into different sectors? Because I would assume that if you had bet all your horses on resources, you would have a serious lambasting.
Well, you wouldn't have been lambasted. You'd still be up on the year. So it wouldn't have been a dreadful performance. And I think,
unless you'd been in the platinum miners.
The platinum miners would have been another thing. But that's the concern. You can't have your primary industry. In other words, in South Africa, that's the start of our value chain. You can't have that languishing in recession with unsecured lending going through the roof, shopping doing very well. So we will never build our long-term prosperity on borrowed money buying fluffy toys imported from China. Let's put it that way. All right, we need...
The economy has to move beyond fluffy toys imported from China.
Exactly. We have to actually we have to actually get up the primary sectors, manufacturing, mining, agriculture, those three sectors. We have to have investment coming in. And the messages to those sectors are still not very good. Not just something to... You can't, have a moving away from a willing buyer, willing seller principle when you haven't actually got what's there working, and you're just trying to a populist approach, to cover up the inefficiencies of the land reform process, for instance, we can't alienate sectors of the society and actually define them as a problem and say you actually have no further part to play in the economy. You actually have to embrace everybody.
Let's bring it forward looking
yeah.
now. If you're looking at 2013, you've got a clean slate, what would you be doing?
2013, I actually will, I suppose in a sense, the resources sectors has languished. And I think we've got a more sensible, pragmatic mindset in the ruling party. So there's value that's going to be unlocked. In addition to that, you've got companies like Anglo, who's now going to get a new CEO. I think Cynthia Carroll did not do a bad job. There was a culture sort of cobwebs that she shook out. But I think Mark Utefani is going to actually take that from an operational point of view, get that firing on more cylinders. Excellent assets, excellent underlying assets. That needs to fund. And if that starts to blossom, for instance, you will have that JSE rising just
so
by
let's
the nature
focus
of the
on
site.
Anglo-American for a while.
Yes.
We'll obviously get those graphs up
Yes.
in a moment.
And just to talk about that, we saw the Anglo-American Platinum came out with the trading statement today. They said
Yes.
that the loss was going to be, I think it was between 4 to 6 rand per share.
Yes.
It's worse than many of the analysts had predicted. You know, how did they get that business right? Because it looks like they're going to really cut a lot of jobs and a lot of mines on that operation.
They will have to. That's the nature of the, you know, when you get destructive.
Let's also have a look at Anglo Platinum, if we can get that up
Anglo-Platinum.
onto screen as well.
Anglo Platinum, you know, if one looked at things like PEs and that sort of thing, the valuations look horrendous. But funny enough, in your resources sectors, when your PEs are sky high, in other words, when you're close to the bottoming of a sector, that's actually the time to consider. So is platinum an area that's about to bottom? Are you going to see some supply destruction taking place? I think you already are seeing quite a bit.
So you're meaning now the other term that everybody loves, supply side constraints kicking
Yes.
into effect in the
Exactly.
platinum sector.
Exactly, but also the demand side is not, no, it's not weak, and you're starting to see the platinum price sort of creep up, and it's done very well this year. And I think if that's the case, less production, but more, but profitable production, these platinum miners can actually do quite
All
well.
right, does that translate into a buying of platinum miners right now? You know, we like to push you with your decision-making process.
So. I actually think so. I think the whole bottoming, you know, all the signs are there for the bottoming, the pessimism, the poor results, etc. A new leadership at Anglo-American, I think, will also do that. Platinum is much easier to bed down because there isn't a whole queue of supply that's going to come onto the market. We know who the suppliers are, and it's here in South Africa, and effectively that has to work.
Would it
ultimately.
be, sorry, Warren,
Yes.
to just keep on the platinum story. We've got Anglo Platinum, we've got Lonmin, we've got Impala Platinum. Would Anglo Platinum be your preferred entry? Or, I mean, there are a number of fund managers out there who prefer Impala over Anglo Platinum.
I have a tendency to prefer Impala as well. Their operations have been a lot more consistent over time, and that sort of thing. So, from a point of view of volatility of results, Anglo Platinum have disappointed. So when you look at, if you want to factor in volatility of performance, you would then say you'd need to actually have a bigger discount on Anglo Plat than you would say with Impala Platinum, and they've bedded down, hopefully, the Zimbabwean. But you know, the Zimbabweans have got a, you know,
But
policy.
that's already been taken out of. I mean,
I
nobody's
think
betting
so.
on Zimplats
No,
to be an ultimate kicker through on
exactly.
Impala
But the
Platinum.
point is that I'd still write more of that off. You know, once you know you've got mechanisms of theft, they won't be satisfied. They'll want to take it all ultimately. So you've got to write it off until you've got a more sensible political play in Zimbabwe anyway.
Fundamental to the resources, Chris, is the ability, and it's across the board for all mining companies in the country, the input costs. Are they going to start slowing down? Is electricity still going to continue to rise at the same rate? Are there ways they can mitigate that? And obviously labour, labour's been growing at double digits as well.
It's not just for the miners, it's for households on the electricity front as well. Please give us some insight on that front.
Well, unfortunately, on the electricity side, that's going to continue pushing up costs, and it's the cumulative effect more than anything. It's not the 16% that they're asking for as a one-off. It's the cumulative shock that we've had over the last 45 years and the shock that they want to impose over the next 45 years. We're no longer a cheap we don't have a competitive advantage as far as energy costs in South Africa are anymore. That's disappeared, and I think unnecessarily so because of inefficiencies there, and that's unfortunate. So hopefully that gets addressed, and then on the labour side, if that doesn't stabilise, we're going to have further problems, and that's
Well, we've already
the
seen
biggest
strikes kicking off for the first part of this year.
Well, the thing is, you can understand when there's a bun fight over the value chain of a particular business, who needs to get what. When the business doesn't exist, the Labour's got nothing to negotiate anyway. The business needs to exist in the first place, and they're getting to the point where UMCU and NUM are saying, I would rather mine didn't exist than you be the dominant union. And that is very, very destructive. That means that the union leadership's interests are very different to the actual union membership's interests, when you've got that kind of destruction taking place. Nobody's in the analysis of things, in the value chain, and the emotions that go with, actually sit down and analyse who gets what out of that value chain. And no economic activity can exist without investment. Right, I defy anybody to tell me what can exist without investment. And the investors are last in line for the value, and they get the least out of that value chain.
We got carried away with this discussion, and I forgot what I asked you. Is in 2013, what would you be doing? We've got about 30 seconds for you to map out your strategy.
I would
here.
actually be looking at the resources sector. I think so. I think there's enough debasement of currencies to carry on, and I think there's sufficient resource, recovery green shoots, if you like, that'll at least support the demand side. Enough demand destruction or supply destruction taking place, and I think you might get those sectors actually blossoming out.